Alright, hello everyone, this is Mark. Taking a look here at the chart of the NYSE. Just once again going to quickly review what we spoke about over the last week or two. How we had these various stocks topping out ahead of the market. The blue arrows indicate the churning and the stalling action up around the highs with the volume increasing, and then the subsequent sell-offs that occurred on a big swell in volume on these days. And of course that led to us going on to a sell signal on the model, and then also pulling back and getting stopped out of our positions and pulling back into virtually a full cash position. So these were the warning signs here. I want to go over them once again and take a look at what's happening now in the market. So now we're getting the sell-off is really starting to pick up steam here. We're looking at the Russell here. This is the New York Stock Exchange, which has taken it on the chin the hardest. You'll see that the NYSE has now blown through its 50-day, its 150-day, and now it's below its 200-day. And this is what's really worrisome to me. There's a few things that are very unnerving here. This is starting to remind me a little bit of 1998 and maybe even 1987, before the crash in 87 and before the big 500-point decline in 98, which that was a time that was on a Monday, and on that Friday I was on a show called the Neil Cavuto Business Report, and I had mentioned to Neil Cavuto that I thought that the market had some similarities to 1987, where in 87 we went down 508 points, and then that following Monday after that show we went down 512 points, which was obviously ironic. So what those two particular times in history had in common were the market got extremely oversold, and there really wasn't a whole lot of concern. There was more of the feeling that, okay, we're oversold here, we're going to snap back, maybe this is time to step in and buy, as opposed to being really worried that something severe was happening. That's kind of the feeling that is buzzing around now. The NYSE tick indicator is at a very, very low reading that would most of these McClellan oscillator, these various indicators that people watch and like to buy when they're oversold and overbought, like I said before, they're very dangerous. But when they're extremely in one direction, and there's not much sentiment going against that direction, then generally what happens is they become a directional indicator. So I think that might be the scenario here. I mean, I wouldn't be surprised if if this market can't recover here going into the close. We could really sell off even more into the close. Now it may come rallying back. I'm not necessarily trying to be an alarmist, but my point is that this is definitely we're suffering much more than just a bruised knee here. Now we're starting to get into a broken arm, broken leg, which takes more time to heal. It means that we're probably looking at rallies are going to be shortable, as opposed to looking to buy coming off the lows here and looking for longs. If the damage keeps proliferating among these various names, then we're going to maybe look to actually move to the short side. If we take a look at a weekly chart, there's another thing that's interesting. You'll notice that this is the current week. This current week is the largest down week in the entire bull market since we made a low. Now, that's to me, I think that's saying that when we couple that with the fact that we see a lot of stocks rolling over and getting crushed, and we see this very evident distribution in the major averages, that to me signals that it's very possible that big institutions are now locking in those profits. And we're talking about long-term big positions that are being unwound here. And I think that's why this decline is so severe, and I'm afraid it may get worse. I think there's definitely a possibility that we can take out this low here before we put in any kind of basing action. We may get some snapback rallies along the way, but right now, as it stands right now, it's definitely a reason for for concern here. So that's it. I just wanted to go over this for the benefit of anybody, particularly that's new and hasn't gone through this analysis with me. So we're on the sidelines, and pretty much right off the high. I wouldn't expect any different. This is the way. Very seldom am I ever caught in any part of these declines, except maybe the beginning stages, and generally we're out before the real damage ever takes place due to the very tight risk control. Real quick, I got a few moments. If you've got any questions whatsoever, give you a second.